Today's podcast is brought to you by Jerry Robinson's PACE Portfolio. Learn how to shield your investments from economic uncertainty with this complete do-it-yourself portfolio package. Learn more at paceportfolio.com. That's PACE portfolio.com.
Friends, welcome to the Friday edition of Follow the Money Daily, a daily podcast dedicated to your personal, spiritual, and financial liberty. Found right here every single day on ftmdaily.com. I'm your host, Jerry Robinson, founder of FTM Daily and the author of the book Bankruptcy of Our Nation. And as you may know, today is Financial Freedom Friday. This is the day that we take to answer your questions, find out what's on your mind. And as always, I'm joined by my lovely wife, co-host, and the national director of our Christian Financial Advisor Network, Jennifer Robinson. Jennifer, before you come on, we always talk about how you are the national director for the Christian Financial Advisor Network. I'm sure the folks, most of them probably know what it is, but for those who don't know what it is, tell them real quick.
Sure, no problem. Well, we like to call it CFAN for short, stands for Christian Financial Advisor Network. And basically what it is a nationwide network that we've put together where you can go and find an advisor in your area. Now, what's really nice about this network is that you can find not only an advisor who has a biblical worldview, and if you are a Christian, they will share your belief system, but also the advisor will adhere to the FTM Daily financial philosophy, which you obviously like and enjoy if you're listening to this podcast. So if you're looking for good, solid financial advice and you don't really know where to turn, and you know we always say, always seek the advice of a trusted financial advisor. And so if you're looking for one of those, and you want them to be a Christian and you want them to steer you in the direction that we talk about here at FTM Daily, then you should simply check it out. You can fill out the form on our website. It's ftmdaily.com. And over on the right-hand side, you'll see the Christian Financial Advisor Network logo. And all you have to do is fill out a couple of pieces of information, very quick and secure, and then the advisor will contact you. So you don't have to do anything else.
Perfect. I appreciate you doing that because I know several people don't know what that is. They hear it over and over, but they don't know what the Christian Financial Advisor Network is. All right. Well, great. Well, as I mentioned, today we're going to be taking your questions. And Jennifer, I know we have a slew. We probably ought to jump right in.
Well, Jerry, let's do just that. The first question comes from a longtime listener and subscriber in New York, and she asked to keep her name anonymous. She says, Jerry, maybe you can clear something up for me. The dollar is being debased and may die in the foreseeable future. If cash will be king at the crash, as they say, and the dollar is being debased, I don't see the logic in holding a lot of cash just to have it wiped out by a collapse. Where is this cash supposed to come from that will be king at the crash? Also, did stocks lose their value in the crash of 2008? And did everyone in the market get wiped out or just most of us?
Well, it's a good and valid question. The question becomes, why hold cash or if cash is going to become worthless? Well, when we say cash, we're talking about liquidity. So actually having liquid money that you can tap, whether it be in the form of something that's, gold and silver, whether it's foreign currency, whether it's money held in a bank account. And that's exactly how we hold our, what we call our DSL, our Diversified 6-Month Liquid Savings Reserve, thirds. So just like we diversify our investments and we diversify our income, we also diversify our savings. You can learn more about that at ftmdaily.com/DSL. Now, regarding the market crash, the 2008 market crash, not everybody lost all their money. In fact, there's many people who just held on and rode the markets right back. And it took a very long time for that to happen. And the only reason that the markets went back up was because the Fed intervened. And that's why we are so concerned about this issue, because now we have the market that has been driven to these new all-time highs by the Fed and explicitly by their own policy they have driven these prices to these historic new highs. So what are they going to do? Are they going to do it again if the market crashes again? Are they going to pump more money in and more money in? So that's why we are very concerned about this particular crash, even more so than the 2008 crash that we predicted, because the Fed did create the 2008 crisis through its very lax policies. Also, the Congress joined in also by, making it very easy for people to buy homes. The subprime mortgage crisis, the credit crunch, we go back and look at all that and dissect it. And we see that it was really just Washington and Wall Street doing their thing, trying to generate more income for themselves. And it led to a collapse of the entire financial system here in the United States. But no, there's plenty of people who held through the crash, held on, didn't sell, and now they're back to break even. The problem is that if you were planning on retiring in 2007 or 2008 or 2009, that was a really tough time. You pretty much had to delay your retirement. And I've talked to many people who have been through that situation. So that's what we want to avoid on this next market crash. I would prefer to step out of the market as it's making its way down, not as it's bottoming out. And that's unfortunately when most people will sell. Most people sold at the very bottom in 2008, and then they did not get back in whenever the market obviously started moving higher in 2009. So I hope that answers the question. I think that probably addresses that question, Jennifer.
Okay, next up is Samantha in Wisconsin. She says, I am considering signing up for your FTM Insider in order to get Jerry's daily trading ideas. However, I need to know what the best trading platform is to go with.
Okay, so she's basically saying which online brokerage, is that what you're talking about?
Yes, I believe that's her question.
Okay, so online brokerage. Which online brokerage should you go with? Well, that really all depends on your own temperament and also your risk profile and what you're wanting out of an online trading account. I would say if you're new to trading, you probably want to stick with one of the more well-known online brokerages like E-Trade or Scottrade. These are very low cost and fairly simple user interfaces for actually placing a trade. Now, we have already shown all of our FTM insiders how to actually place a trade in our trading videos that we have online in our subscriber area. So we've shown you how to actually place a trade with E-Trade, how to set a stop loss, the difference between all the different market orders, limit orders, all that kind of stuff. That's all very important information. And it's very simple and straightforward, I think, with E-Trade and Scottrade. But the difference really boils down to the tools that you want to use. And I really like the real-time charting that is available through both Scottrade and E-Trade. And there's also another online brokerage known as Interactive Brokers, and they're actually very aggressive, very well priced on their per trade charges, and they have low trading fees. Another thing that's important is the mobile access that you have with the trading account. And I've found a couple of brokerages in particular really excel at this. There is one, of course, Interactive Brokers I just mentioned before, and also TradeMonster. TradeMonster is quickly becoming one of my favorites in their usability, in their mobile access, in their research tools that they offer. Very compelling potential for those who are looking for a good platform. So TradeMonster, Interactive Brokers, E-Trade, and Scottrade have been my personal favorites over the years. And of course, you really want to pay attention to costs. And I would say that the cheapest broker that I have found online is Interactive Brokers. They are definitely very competitive on their trading costs and fees. So those are some of the things to think of. Now, just so you know, I do use E-Trade whenever we're using our Trigger Trade Pro system and we're doing webinars and live trading and all that kind of stuff in the future. So you might keep that in mind as you go to purchase an online trading account. E-Trade is the one that we use here. And so I hope that helps, and good luck to you, Samantha. Jennifer?
Right. And if it is important to anyone, I know Scottrade has many, many local branches. So if it's important to you to meet face-to-face with someone or to be able to physically take your deposit check to someone's physical hand, then Scottrade is a good one to go with as well.
Yeah, when you want to go down and wring somebody's neck, you used to have somebody right down the street.
Exactly. I wasn't thinking of that, but yes, that is another good reason. Okay, the next question comes again from someone who wishes to remain anonymous, and I can understand why with this question. Okay, he says, I've heard that safe deposit boxes can be confiscated in a bank run, and your contents are not very safe there. I have a lot of gold and silver, and I would like to know if this is true, and if it is, where should I store my gold and silver? I live in the middle of a big city.
Well, that's a good question. Well, I think you're smart to definitely lay low with your safety deposit box. If you have one, don't be going around and telling people about it, because it's one of those things where if you ever get into a deal with creditors or a lawsuit or whatever, they have to know about it in order to access it. So I wouldn't be telling people that I have one if you do. Second of all, you got to remember that the governments control the banks. So if you're concerned about the government kind of coming in and doing some sort of seizing, or the IRS, coming in, well, there's always that possibility because the government controls the banks. The Justice Department themselves actually can come into your safety deposit box if they believe that you have something in your box that could be related to national security or, stolen government property or things like that. So it's not completely and entirely safe. I think that you are wise to have some concerns about it. But historically, overall, they have been a fairly safe place to keep things. Some people put cash into their safety deposit box thinking that they'll have it covered by FDIC, and FDIC does not cover cash that is in a safety deposit box the last time I checked. Also, many people will put things like their will in their safety deposit box, and that ends up not being a good idea because oftentimes you'll need a court order to have it opened after you pass away. So you want to have a copy of the will somewhere that's handy and doesn't, cause your relatives or friends and family a hard time just to get access to. But when it comes to your gold and silver and your safety deposit box, I don't think, personally, I don't do that. I'm in a place where I can put it on my property. I can keep it on my land. I can keep it hidden. There's all kinds of ways to do that. Gun safes that you can purchase or other kinds of safes that are fireproof. And what we do is we just keep ours, in the ground here on our property, and you're just not going to find it. It's just, there's no way. There's just too many acres. You never find it. But see, I have 24/7 access to it. And that's what I like. Unlike with the safety deposit box, I would have to pay a fee, and then I would only have access to it at certain times. I'm not open to that. So I prefer to store my own gold and silver with me. And there's really only two ways to do it. Either hold it yourself or you have somebody else hold it. You can always have a trusted third party hold it. There are plenty of companies that do that, but I prefer to keep it myself. That's my own personal preference. That's what we do. And I think in this crazy world that we're in, where anything is becoming possible, having that physical gold and silver right next to you, 24/7 access where you can hold it, see it, touch it, feel it, is just the smartest way forward in this environment. Jennifer?
Okay, Jerry. Next one comes from Steve in Denver, Colorado. Jerry, how much money do you think I should keep in physical cash in my possession in case of emergencies or a bank run?
It's a really great question. What we do personally, and we even teach us in our 5 levels of financial freedom, is we keep 1 month of cash, 1 month of expenses within our possession. The rest goes into our diversified 6-month liquid savings. So we have some in the bank, we have some in foreign currencies, we have some in gold and silver. But we do have cash, cash money ready to go, hidden. Now, the other thing that we do in our go bag is we keep silver coins in the event of a major breakdown. And I'm talking a serious major economic breakdown, which could happen underneath many different circumstances. If you pay attention to what's happening today, for example, Bill Gertz, who is a Washington Times reporter, he reported for the Free Beacon this morning that terrorists are planning a digital 9/11, in essence, attempting to cause significant damage to our electric grid, to our utility providers, and things like that. You have a big breakdown like that, and you're going to have a problem. So you want to have cash on hand, but we also want to keep physical silver. And when we keep physical silver, we want to keep round coins. We want to keep things that shopkeepers could actually recognize and accept. You walk into a store and, society is breaking down and you walk in with a brick of silver. Well, some people don't even know what that is and they're not going to accept it. So you'd be lucky if you did find somebody to accept it, and you'd have to find a way to make it divisible. So it's better to have round coins that are acceptable. So when shopkeepers see them, there it says United States on it, or if you have some rounds that also say United States, those are easily recognizable. And so shopkeepers or people you're wanting to trade or barter with would easily recognize those. But I think 1 month of your overall expenses should always be kept in cash. But I think that you don't want to go too much higher than that, because you don't want to have that much cash sitting around your house unless you have it very well hidden like your gold and silver.
That's right. And another idea, if you are going to keep that amount of cash in your home, you might want to, especially if you live in a big city where robbery robberies are more prevalent, you might want to have a little decoy stash in case a robbery were to ever happen in a place where robbers might very well look, like the dresser drawer or coat pocket or something like that. They can take that and wouldn't get your bigger stash of cash. So anyway, great question. Okay, well, our next question comes from Susan in Lansing, Michigan. She says, I bought gold when it was in the 1790s in 2011. Should I sell it, or do you think it's going to go back up to those levels and even higher?
Well, it's hard for me to say, Susan, what you should do with that gold. I don't know your overall situation, but I would say that if I bought some gold back in 2011, which I did, I would not sell it. 2011 was one of those higher years. And so over time, if you buy and you dollar cost average in, then I believe you're going to be okay in the long run. Besides, I believe we're going to see another major leg up in gold based upon our Trigger Trade Pro system, based upon the charts. It's telling us that gold is nearing a major, massive bull run. And we know, of course, that it's just a matter of time before the dollar does finally weaken to the point where the gold can just, again, take off and move higher. So my gut reaction is to tell you, no, don't sell your gold unless you just have some really important reason to sell it. You really need the cash. But even then, I'd be looking for something else to sell, because gold is one of the few pieces of insurance that you can really buy to insulate yourself from all of the issues that we see coming down the pike here in America and the global economy. So I would not be rushing out to sell it. You did not make a mistake in my mind to buy gold in 2011. That is not a mistake at all. I think when people look back 20 years from now, they'll say, wow, you bought gold in 2011 when it was less than $2,000. I don't think anybody's going to look back and say, oh, you bought. No. I mean, again, the trajectory for gold is very obvious. If you believe that Washington and Wall Street and the Federal Reserve are going to make everything okay, then that would probably be a good reason to sell your gold. But if you think that time is ticking, time is running out, and they're eventually going to run out of bullets, then I would be holding on to that gold and keeping it close to me, because it will come in handy when the whole thing goes up in flames. Jennifer?
Okay, well, I believe we have time for one final question, and it comes from Thomas in Dallas, Texas. He says, Jerry, I have a friend who is buying up a ton of Iraqi dinars and the Vietnamese currency. He told me that he was coming into millions on July 1st after investing only several $1,000s into these currencies. Did my friend make a huge financial mistake, or is there something I can do to help him perhaps?
So, Thomas, your friend bought some Vietnamese dong and some Iraqi dinar. Well, there was a lot of that going around for a long time, especially around the July 1st date that, again, many people got swept into thinking that the dollar there was going to be some sort of global currency reset and all of these currencies were going to soar. We got phone calls here about the same thing, people saying they were going to be making millions and millions of dollars simply because some shift was going to happen and these currencies were going to go up. The Iraqi dinar and the Vietnamese dong is the name of that currency. Now, your friend made a mistake. I'll just be honest with you. He made a mistake. He made a big mistake because these currencies are extremely unstable. And so I would not be putting any kind of money into this unless it was money that I was going to be spending on a lottery ticket. I don't trust anything about the whole idea of a Iraqi currency revaluation. You constantly hear about that in the Iraqi dinar world. And the Iraqi dinar really got popular in the post-Gulf War era, and especially after the Iraq War here in 2003. Because of what had happened back in the Gulf War, about how some of those Middle Eastern currencies had really revalued very sharply after the war. So there was a thought amongst soldiers who were coming back from Iraq and others that the Iraqi dinar was a sure bet. You just had to buy some. It was so cheap. How could you not make money on it? And unfortunately, it just hasn't panned out for people. They bought a lot of it and it just hasn't worked. And so your friend made a mistake. Now, I could be wrong on that. It could turn around. That's why I bought some Iraqi dinar, but I only dropped less than $500 on it. It wasn't something that I put a whole bunch of money into. And if that's all he did, that's fine. But it sounds like he put a lot of money into this. I would be trying to get my money back if I were him. Hopefully the currencies haven't dropped too much since then. And you're a good friend, I should say, Thomas, for writing in because, you got to stick up for your friends. And if he's getting shafted by somebody out there saying, well, buy these foreign currencies that you know nothing about and then hope it goes up. I mean, that's just like a lottery ticket. So, good question. Sorry that happened to your friend. It happened to a lot of people. Iraqi dinar guys, no. I just don't like it. If you want to buy something as a lottery ticket, that's fine, but don't buy it thinking it's going to go up because there's just no evidence of that at all. In fact, that whole industry is filled with a bunch of shysters. You got to be very, very careful when you're dealing with this stuff. If you want to buy foreign currency, buy stable foreign currencies. But the problem is, Jennifer, is that so many people today don't have a financial plan. They don't have a retirement plan. They don't have enough. And so they have to spend their lives trying to hit home runs. So it's never about, just saving money consistently or wise investing and diversifying and buying some good property and, trading your cash for cash flow. They have to, go out and hit a massive home run because they have made, poor financial choices over their lives. And, you can always recover from those if you will just commit to being wise. I mean, you can't always recover from everything, but there are a lot of things you can recover from. And I would say today is the day to get started on that path, to start making a wise decision. You can use our free 5 levels of financial freedom to do that online at ftmdaily.com/5 levels. There you'll find lots of free information on how to build a great financial plan that'll hold up no matter what happens in this U.S. economy. Whether we have hyperinflation, deflation, whatever the case might be, we've got a good plan that we're personally using and we're sharing with you for free on our website, ftmdaily.com/5 levels. All right, Jennifer, it looks like we're running out of time here, so let's do a quick check of the markets here. What's happening on the S&P 500 and gold and silver?
The S&P 500 is down about 0.5% today so far. It's at 1976. Gold is at 1303.60. Came back above that 1300 level today, which is nice. And silver is up to $20.51 today, up about 0.6%.
Well, the S&P 500, it's pulling back a little bit today, but it's still up nicely, and it's above that 1950 level. Remember to pay very close attention to that. Now, one thing to tell you about the S&P 500 here as we head into the next week is watch that 2000 level. It's a major psychological level. We're sitting at 1977 right now. We've been up to 1990 intraday, and we've actually gotten up to 1985 or 1987 as close, as the highest as of this radio show. So when we hit 2000, it's either going to be a massive ceiling that's going to drive the S&P 500 back down into some consolidation probably, and then it'll try to attempt it again later, or we're going to crash through it. The third option is that we're going to go up to it and dance around it for a while as the market tries to figure out what to do. So, 2000 is going to be a really important level. Whatever the market does at that level is going to be very important for those of you who have money in the market. You're going to pay very close attention to what happens. We'll alert all of our insiders and Market Barometer subscribers as soon as the market winds change. But right now, the market is green. It continues to go higher, even despite these little minor pullbacks that we're getting every few days. Still waiting for those big long-term buy signals on gold and silver to fully develop. We have full triggers and we have a tripwire on our system, but there is no confirmation yet. So we're just simply waiting and waiting for the confirmation on gold and silver. It could be sometime. We had a short-term buy signal on it back at the beginning of June. That worked out perfectly, but we're still sitting here and waiting for that long-term buy signal, and we'll alert all of our subscribers the day that it happens. You'll get that email. All right, friends. Well, that brings us to the end of our program. Thank you so much for choosing to allow us into your life each and every day right here on this program. And as always, I leave you with this final word, this time taken from the book of Ecclesiastes, chapter 5, verse 5, where it says, "It is better that you should not vow than that you should vow and not pay." Just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous weekend, and we'll see you right back here on Monday. Until then, God bless.
All of the information contained on Follow the Money is strictly for informational and educational purposes. The views and opinions of our guests and sponsors, including Tom Cloud and Jay Peroni, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry and Jennifer Robinson do hold their insurance licenses and may offer consulting on life insurance and fixed retirement income products. Jennifer Robinson is an investment advisor representative with Faith-Based Investor, LLC. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making